I think venture is also going to be very different because of AI.
Okay, so first question is, who's the founder you admire most?
I have to say Elon.
Elon.
Yeah.
Okay.
I mean, he put 3 separate companies together, and
Did you buy SpaceX?
no, overvalued.
Did you buy
But
Tesla?
I did it at one point, and I
Okay,
sold. Yeah,
you sold?
yeah.
Okay. Second question, who's the investor you admire? Doesn't have to be me.
I think in the AI world, like Sarah Guo has,
Sarah Guo.
has
Oh,
I mean,
interesting.
she kind
From
of
conviction.
built herself, and I think she's done a really good job.
Next question, what's the most overrated thing in AI right now?
I think part of the robotic thesis, I wouldn't say all of it, but part of the physical AI thesis.
Got it. What's the best investment you have made outside of VC?
Family, wife and kids.
Oh, I like that answer. Okay, last question. That's a very, very, very high quality rapid fire questions. So I think let's begin on the podcast. So great to have you, Kelvin.
Yeah.
Kelvin is a very well-known investor in the Bay Area. I first know him from his article, the research he wrote on Substack and email. So Kelvin, maybe give a quick intro about yourself, about who you are, where you come from, and where are you now.
Cool. Hi everyone. I'm Kelvin. TransLink Capital is the firm I work at. I've been there for about almost 4 years now. Prior to TransLink, I actually started my career off in Canada, Canadian citizen, and I was doing investment banking, covering technology sector. And I was there for a couple of years, and then realized that if you really wanted to learn technology, Canada's probably not the right place to do it. So I then packed my bags and moved to the Bay Area. So that was about 10 years ago. And then after the Bay Area, I was working at a few technology companies, kind of leading strategy, corporate development teams. And then the last one being a company called Carta, which a lot of people are familiar with, do cap tables. So I was there for a couple of years, and I kind of just fell into VC. I wasn't going after VC. Actually, someone reached out to me, said we're looking for someone with operating experience that's worked in finance before, and thought it was a great fit. So just applied and luckily found my job, good job there. And then so I've been at TransLink for 4 years. I cover all our thought leadership around AI, our thinking around investments in AI, look at the full stack all the way from hardware component level to infrastructure to tooling to application layers. So full stack investor.
Cool. So you say like you came from Canada, but at that time you didn't think Canada is the best place for a career.
It depends on industry. I was in software banking.
Okay.
And there's probably, I don't know, half a dozen sizable software companies in Canada. So unless you want to be in metals and mining or forestry, it's probably not the best place to be in. So that's why I decided to move to Bay Area.
Right. It reminds me of a friend of mine who's also an investor running his own fund called Maple VC.
Okay.
So his GP, their GP, the founder of that fund is Canadian, and his thesis is only investing in Canadian founder. So the first time when I heard this thesis, I felt, does it gonna work? There's I think our impression is like in Canada there's not that many amazing founders. But and then he kind of explained his thesis. He was saying most of the amazing founders from Canada, they are in the US right now, and a lot of like a unicorn company, even like listed company, at least the C level can be a CTO, CPO, CO. Have at least one Canadian in the C level. So and then I feel like, oh, okay, this maybe makes sense. And then I was like, oh, well, so any interesting company you did, you invested in fund one. I was like, okay, well, so what's your fund one? Check pocket. He said Clay. And then I realized, oh, Clay is a Canadian company or Canadian founder. So to you, that like right now, I believe you still like travel back between US and Canada. Do you see like the kind of opportunity momentum has been shifting back to Canada a little bit, or still people are they want to come out from Canada to the US?
So I think there are arbitrage opportunities on investing in Canadian founders, but I think you need to go in like early. You have to get them while they are in school or just graduated from school, right? If you're investing in growth, to be honest, there's not that many growth companies, good growth companies in Canada. But if you're investing in like pre-seed and you're trying to grab the founders from Waterloo or UFT or whatever schools, I think that might be a play. So I definitely think there are opportunities. I think you just have to make the stage fit.
Right. Makes sense. Cool. Let's jump into the article that Kelvin, you recently published. So maybe before we talk about like what's in that paper, did you count like how many paper or articles you wrote or you published so far?
I think part of it was I entered VC right when, I think month 2 or month 3 is when ChatGPT came out. So the part of it is just the right timing. That something so revolutionary came out, and I was so excited about it and wanted to write more about it. Part of it was like trying to find where my niche is. Like every investor has their own style and niche, and I thought content writing would be something that I'll give a try. and thankfully it worked out. So I think it was just kind of everything kind of aligning. But I do enjoy it. I think writing content is a great way to actually learn myself, do the research, and then try and find the right way to say things. And I think that helps me learn as well.
Did you? So you sounds like you didn't try to write before you joined VC.
Not really.
No.
Yeah.
Okay.
And I thought now like a lot of people write about AI, so it's like it's getting a little crowded. But when I was first starting out, like I was looking through Twitter, and there's a lot of like in Twitter you get like really good like real live news, right? But there wasn't anyone writing about like comprehensively about a certain topic. So I saw there was like a gap in the market essentially. But I feel like now today everyone is writing about AI.
Okay, so let's talk about the your recent paper, the growing cost of intelligence. Maybe give some high level about the background that I think.
So I think let me step back a little bit. So the firm I work at, TransLink Capital, our LPs are all large corporates. We have over 40 of these corporates. Today they're primarily in Asia, but we're also expanding outside of Asia. And a lot of them have been, maybe last year they were talking about, hey, how do I adopt AI? What do I use? What are the use cases of AI? And I feel like this year things have shifted pretty abruptly. And the topic has really switched to how do we leverage AI in the most efficient way possible? And I think you've seen some articles. For example, Uber published an article saying they burned through their entire year's budget in Q1. I think there was another article recently about some firm using $500 million of Anthropic.
Do you know which firm is it?
I have no clue who it was. Probably someone very big. So I think people now are starting to kind of shift their focus on efficiency and optimization. And so that's kind of the impetus of why I wrote about that, the cost of intelligence. I do think it is going to get much more important going forward. And I think people are underestimating how important costs are.
You definitely heard that a lot of like a startup company, they're doing a token race internally, like see who burns the most of tokens.
Yeah.
And I think the C-level believe, oh, if you're burning more token, it means you're more AI native.
I think sometimes technology moves in waves, right? The first wave of a new technology, everyone is so excited about just pure adoption. If you adopt it, that itself is an advantage, right? Afterwards, when the technology becomes more mature, then people don't care about adoption. People care about efficiency and costs, right? Give you an example. You can look at any technologies in the past, but maybe one example is like e-commerce, right? E-commerce, when that first got started, Pets.com, some of these other like companies that went to IPO, they didn't care about unit economics, right? They just care about like how many goods do I have on my store? Can I actually deliver the goods? But look who ultimately won. It was Amazon, right? And Amazon really nailed the cost factor down, right? They were able to become the lowest cost provider, not just in terms of supply chain, in terms of inventory management, and that's why Jeff Bezos said like your margin is my opportunity, right? Because in the long term, cost is a huge differentiator, and it's probably the primary moat in the very long term, right? So I think now before everyone's worried about adoption. That's kind of the benchmark. Now that's no longer the benchmark because everyone is adopting. So what's next after like pure adoption, right?
So it sounds like you are on the other side of like people are they judge internally. And are you using the most?
I don't think you should just measure. I think there needs to be a ROI component to it. Now the question is, how do you measure ROI? No one has really figured that out, right? So if you're just purely like adopting it and measuring it based on absolute consumption, I think that's probably the wrong strategy in the long term. In the short term, yes, you want your company to adopt AI as much as possible. So maybe that is a good benchmark for it. But in the long term, I think that's not sustainable.
Right. Yeah.
I think the other change is that maybe last year or a year before, a lot of the budget for AI is coming from like a one-time innovation budget, right? It's not like a fixed long-term budget. They're like POCs that are more one-off in nature. But as these budgets become more fixed in nature, then the cost becomes more important, right?
Yeah.
So I think that's another change.
So in the article you mentioned about demand scales like software, but supply scales like physical infrastructure. I think the point you're trying to make is the supply just couldn't catch up on the demand.
Yeah.
So how do you think this will evolve? Like, I mean, people are talking about how frustrated to build like data center. We're seeing the memory costs, the GPU, whatever, all the supply chain in the AI ecosystem, the price are like skyrocketing. Do you think we will have maybe in 2, 3, or 4 years we can see the price coming down? And why? What happened? You think you can make the price come down in the next couple of years?
I think I don't know what the timeline looks like. I think for sure there will be a point where the demand supply balance crosses over. Maybe it's 2 years, maybe it's 3 years, maybe 4 years. I think there's a couple of factors playing into that. One is on the kind of kind of the regulatory side, like government support, especially in the U.S. We have administrations that change constantly all the time. They have different priorities. How do we get a cohesive strategy that doesn't change, right? How do we get things like zoning permits? There are a lot of pushback by states right now. They don't want to build data centers in their backyard. So how do we resolve that? So I think part of it is regulatory. But if the economics are there, if this is a profitable space to be in, I think people will move as fast as possible to open up supply. And you're seeing that on the memory side, right? And I also think like countries like China may also come up with their own supply chain, which may also open up the supply on the supply side, right? Because memory isn't unique to a country. Memory is memory, or GPUs, or compute is compute, right? Obviously, you can have some countries that say, oh, we don't want our compute going to other places, but for the most part, I think if you believe in economic rationality, then it should kind of sort itself out as long as the profits are there. So that would be my second. But on the demand side, things are also accelerating very quickly, right? When you think about agentic workflows, I think about like things like reinforcement learning, like that is very compute intensive. And as these workloads get more and more complex, you do need more tokens, right? So I think on the demand side, it's going to continue to increase.
Yeah, I just feel like demand is just keep going up. I think right now the biggest bottleneck for engineers are just like not enough token. If they can have 10x more token, they will use it. They will use it like in a second. 10x or even 50x. I think I just don't see that in the near term. In the short term, we can solve this kind of supply issue. Yeah. But at one point you mentioned, I think is quite interesting. I was like recently watching another podcast that they were saying, like China, they are actually exporting token because when the model through the model, so it makes like China as a net exporter of token / energy. Maybe this could be a solution in the near term when more people are switching to the open source built by Chinese company. And like Chinese company, in China they have enough or more, I guess more than enough, like power supply and data center, and then they can just export that token just like a good, exporting token as a good to the rest of the world. Maybe that can elevate.
I think that's a huge factor, and I didn't talk about it in my article because I was focused more on the enterprise side. But I think China has huge advantages when it comes to AI. When you think about their cost basis on the hardware side, on the power side, and on the talent side, right? You're not paying $5 million salaries, right? You're paying a tenth of that, which is already very great, right? The energy is subsidized. There's an abundant amount of energy, right? So all of that plays into the cost equation, right? So if you're an engineer and you can get a similar performing model for a tenth of the cost, why would you not use that? And as the model gets more commoditized, I think that just gets more and more important.
Makes sense. So speaking of, we touched a little bit a while ago is on the ROI thing. Like in what ways that you think the enterprise will adopt kind of like the ROI measurement, or for them to measure whether the right now the token usage or token cost?
So I think there are some use cases where you can objectively measure the ROI, right? So for example, like customer support, right? I'm going to get rid of 50 people. I'm going to replace it with the model, right? What's the token cost? What's the cost per ticket versus the cost per ticket on the human side? And compare that pretty apples to apples, right? I think there are, so that's very obvious. I think there are certain areas that are like I would say medium obvious. Maybe something like engineering, like coding, right? Where you are replacing headcount, but it's not like a per ticket. Like you can't objectively quantify the ROI, right? But you can still say, okay, I'm replacing engineering. I'm speeding up my shipping, right? And then there are like some things that are, I think, very difficult to quantify, right? But I think it's a spectrum. I think there is a case to be made where like there's still a lot of value even though it's unquantifiable. So for example, if you're a company that uses AI for coding, let's say, and you're another one that doesn't or doesn't use as much, the first company may be shipping 10 times as much as you are, or 10 times as faster. Even if the ROI is not obvious, you will still need to keep up with that. Unless if you don't, you're gonna fall behind, right? So like AI becomes more like basic table stakes. you don't have it, you won't even operate, right?
Mm-hmm.
So that is like, I don't care what the ROI is. If I don't have it, my business will fail. So I think that's what people are worried about. Yeah.
Right. So, because I'm just trying to think, because the fund you work for, TransLink, you guys are like super tap into like Asia, East Asia, Japan, Korea, also Taiwan. By speaking with like those, maybe some of your LP, some of your outside of your LP, but large enterprises in those regions, compare them with like what you're seeing in Silicon Valley. Are there any like, are they hustling, just sprinting to catch up, or you still see there are, because of the compliance issue, they are still like behind in adopting AI internally?
I think they, some of those geographies are, I would say, the enterprises, they can be more conservative. They can be a little bit more careful before adopting. But I would say everyone knows that it's coming, right? It's just a matter of time. And I think everyone's trying to like figure out some questions. Do I build this internally, or do I hire a third-party vendor? Who do I go with? So I think there's just like some basic questions. I think a lot of our LPs are also thinking about new opportunities, revenue opportunities with AI. So I'll give you an example. Like we have a bunch of system integrated companies in Japan, right? And these companies, are think of them as like helping other large companies like think through the IT strategy, AI strategy, and they're thinking about like, okay, like what are the new opportunities with AI? Like customers need an AI strategy. Can I come in, sort of like a Palantir, like kind of come up with a strategy for you and help you deploy AI? Can I partner with like Anthropic or OpenAI? So they provide the model, but we provide the implementation, right? So think about these new revenue opportunities associated with AI. That's more exciting to them than, hey, I want to save like 2% of my headcount.
So they're thinking still more focusing on the revenue,
the business
driver,
opportunity,
right?
And I think that's a much bigger bucket of value than the cost side.
Makes sense. Cool. So back to your article. I think talking about governed decentralization. The center builds the rail, and the business units decides where the train go. So what do most company get wrong today, and what does getting it right actually look like?
I think a lot of companies think a bit too black and white. So either should we centralize AI strategy or should we decentralize it? I think it should be a hybrid approach. I think AI is a little bit different from the past SaaS wave, where I think SaaS for the most part is more top down, right? So for example, like if I'm a company and I want to use Salesforce as my CRM, right? I'm going to tell everyone, hey, install Salesforce, learn how to use it. This is going to be our system of record for sales and marketing, right? Whereas I think AI, the use of AI is a lot more bottoms up, right? And you see a lot of these like AI startups that are doing very well. They're actually more prosumer, not as much top down, right? It's because it creates so many opportunities for so many different people. Like marketing people can use it, sales, engineering, customer support. So by definition, I think AI is more of a bottoms up adoption. But you can't have like, if you're a large organization with hundreds of teams, you can't have everyone trying to fight for the same stuff, right? There needs to be some governance. So this is what I mean by decentralized governance, which is you have the adoption come from bottom up, but you have the infrastructure and centralization and procurement from top down.
Are they implementing this like this way?
Yeah, I think there are like for example, there's a new role that like the chief AI officer, which didn't exist 3 or 4 years ago. Now I think it's like I saw a stat, somewhere like a quarter of companies have a chief AI office. And then you have like some companies have this like center of excellence, AI center of excellence, right? Where it's probably led by the chief AI officer or like chief digital officer. So that's kind of your centralized layer, right? And then you have the BUs kind of like promoting ideas to that unit. So that's one structure that I've seen on there.
So this article is you call it part 1.
Sure. Yeah.
How many parts are you thinking?
At least 2, maybe more.
What will be the part 2 going to be about?
So part 2, I'm collaborating with a few other investors to write this. And so part 1 was focused more on cost as it relates to the enterprise. And I think part 2 will be more about cost as it relates to investors, where the opportunities in the stack for cost. And maybe to give you a little bit preview, I think the high level thesis or conclusion of that article is that just like LLMs have kind of like specialized, right? We have a general purpose LLM before. Now it's like you have like different specializations. The same thing will happen to the inference optimization stack. So a lot of the companies, startups before were kind of focused on the model layer, but now you have like, for example, inference, like cost optimization for like video, for audio, for different modalities. You have optimization for NVIDIA GPUs, like AMD, like you have hardware specialization, you have modality specialization, you have optimization for agents versus for robotics, physical AI. So you have that specialization for use case. So it's going to get a lot more fragmented, this cost optimization stack, right? You have optimization for the edge versus the cloud,
Yeah.
right? So I think the whole premise is going to be things will be much more specialized, but that creates a lot of opportunities for investors, especially M&A opportunities, right? And then when you think about what that's worth from a TAM perspective, right? If you think like, let's say AI will contribute, just making this up, like $5 trillion, which is about 5% world GDP, and you save even like 100 basis points, 1% margin, that's like $50 billion, right? So I think it's a huge TAM, and it's a huge opportunity for investors to think about.
You believe the opportunities in the future are more vertical than horizontal, or
I think you can say it that way. I wouldn't say verticalization is the right word for it, but I think it will be more specialized. It will be more specific, right? So you're not just going to get a general optimization platform, right? It's going to narrow down to the hardware use case modality. Yeah, I think the one other point that I want to bring up to why I think cost will be more important in the AI world, and I wrote about this in my article, is in the past, when it was all humans labor, it's kind of easy to hide human inefficiencies, right? You can always make the argument, hey, this person should get paid more because they're more experienced, or they live in San Francisco, high cost of living, or they have more like soft skills, right? In the AI world, it becomes a lot more black and white, right? Like no one's going to care whether AI is have more soft skills, right? It's going to be like, what's your cost per ticket? What's your cost per line of code, or whatever metric you want to use, right? So because of that, then I think the CFOs and the boards are going to be a lot more. They're going to care a lot more about cost efficiency because it's a lot easier to compare now. So that was also one of the hypotheses that I brought up.
Makes sense.
Yeah.
Makes sense.
I think my childhood has kind of helped in the sense that it's kind of opened my eyes to the world and allowed me to think sometimes out of the box. So for context, so I was born in China. I left China when I was 4 years old. Then I moved to England with my dad, and then I was in England for a few years in this small town called Bath. And we're there for a couple of years, 4 years.
That's where the Stonehenge is at, right?
Stonehenge is not in Bath. So Bath is like this big Roman bath, literally. When the Romans invaded England, forgot when it was, like whatever century, they built this bath. And it's pretty much the town is like the bath, and then the university. That's it. Anyways, so I don't remember much because I was young, but I was there for a couple of years. And then when my dad graduated, our family moved to Canada, Toronto. And then in Toronto, we stayed for like 15, 20 years, moved but from a bunch of places. And then settled, or I moved to the Bay Area afterwards. So I've got a taste of like, being born in China, the East Side, and Europe and North America. So that's kind of like given me a pretty diverse kind of experience.
You want to talk a little bit about the story about your grandfather?
Yes. Yeah. So this is so I learned about the story like not too long ago, 3 years ago. But one day I was talking to my family, my grandpa, and they brought up my great grandfather. My great grandfather apparently was a brilliant guy. So he used to be the ambassador of China to Germany. I think in his late 1800s. He also was the founding member of a pretty big bank. I think one of the first banks in Beijing, and also there's a newspaper called like Taipao or something like that. It's like a pretty famous newspaper in Hong Kong. I don't know if it's around anymore, but it used to be one of the largest newspapers, and he also founded that. So he's like a pretty wealthy guy, and he also amassed the biggest collection of books. So he had about like 60,000, 70,000 books going all the way back to the Ming Dynasty. And so the story goes that my great grandfather kind of spent all the money, all the fortune of the family. I don't know what he was doing. Don't ask. And times got desperate, and so we actually took the 60,000, the library of books, and we sold it to the University of Toronto, which is not the school I went to, but I moved to Toronto. And so right now, if you check, this is called a Mu Library, right? It's part of their East Asian library, and that's where the books landed. And so I think it's a pretty interesting story because that's where I went to. But I think the most interesting part is sometimes when I think about it, you say, like your great grandfather gave away your fortune, you could have been really rich, right? But then sometimes I think about it, it's like, okay, well, if that didn't happen, then probably all those books would have been burned during the Cultural Revolution, right? And so sometimes I think when sometimes things don't go my way, I sometimes think about that example, which is like, you never know a bad thing could actually be a good thing could be a bad thing. So don't always jump to conclusions ahead of time.
I agree. So I guess the story was like they sold the books when they were in China,
Correct.
So they somehow got connected with the University of Toronto.
Correct. Yes.
Wow, that was a lot of travel for the books.
Right.
So where can we see the books today?
If you go to the Toronto University of Toronto,
Library?
there's a library. Yeah,
library.
It's called the East Asian. It's part of the East Asian Library, which is the biggest collection of books of Asia books in the West. And there's a Mu library.
Because I heard about like there's like Mu library.
Yeah.
My impression was, oh, you guys donated the books.
Oh, I see.
I think it's good. Even you sold it, it's still the name come after.
Yeah.
Right.
Yeah.
Okay.
Yeah, that's the only place I go for VIP treatment. I went there once, and they were like, "Oh my god, you're the Mu descendant," and like spent a lot of time with me, and it was like,
nice. Wow. That's I mean, yeah, I think not like a lot of like very few people would have that kind of experience.
Right.
Going to a library and then you saw something from your family. That's pretty cool. So where did you go to school for college?
In college, I went to a school called University of Western Ontario. It's about a 2-hour drive from Toronto in a small town called London, not London, England, London, Ontario. So I studied business there for 4 years.
So and then after that, you started first career in investment banking.
Yes.
And then you did some like
actually, my first job was not in banking. My first job was in a telecom firm. It was because I graduated in 2009, which was probably the worst year to graduate.
Right after GFC.
Right after GFC. And so I wanted to go to banking, but there just weren't that many banking jobs at the time. So I worked in about a year at a telecom firm doing strategy, and then I transitioned over to banking afterwards.
And then after that, you after banking, you joined
did my MBA.
Oh, you did MBA?
Yeah.
Oh, where did you go? Where did you do
Berkeley
MBA?
has.
Berkeley has.
Yeah.
And after Berkeley, you joined like you're doing again strategy.
I did some consulting, management consulting for a few years, and then I went to strategy at a public health tech company. And then
eHealth.
eHealth, yeah. And then I did Carter, and then TransLink.
Got it. So now when you look back, do you say things you're doing right now in VC is your most favorite job?
Oh, for sure. In terms of the jobs that I have, yeah, by far. Yeah.
So maybe tell me a little, or tell the audience a little bit more that what are you doing every day?
Every day?
Yeah. What's your routine look like?
I think the part of the reason why I like this job so much is that there isn't like every day is different, right? Every day is different. So some days I do more like content writing. Some days I do more meeting founders. Some days I go travel to a conference. Some days I work with portfolio companies. Some days I talk to LPs and fundraise. So every day is different. I think that's what I enjoy about the job the most. But if you had to pick what part I enjoy most, I think it would be one is supporting the current portfolio, and the second is meeting new founders.
Okay. Yeah, makes sense. And you have been in VC for 4 years.
Almost 4 years now. Yeah.
How do you see yourself in, let's say, 10 years time?
10 years. First, I think I've kind of learned through the years not to project out too far, because I think things always change. In 10 years, I want to be in a position where I can be viewed as a thought leader in the space that I'm operating at, that I can be relied and trusted on by whether it's portfolio companies, founders, whether it's other employees, and I just want to be good at what I do. Yeah.
I'm gonna ask like have you thought about like starting your own fund, and or do you think VC is a good business model? I can share my what I think first, and I'd like to hear yours. I think overall, I don't think VC is a good business model.
Okay.
I mean, first of all, but again, a lot of people are very curious about, or they think VC are making a lot of money.
Yeah.
But I think, I don't know, I don't have any statistic, but I just feel maybe only 20% of the VC have the capability to return the money. Not talking about making profit yet. Yeah. I think 20% of the VC they're doing not bad. They're able to return the money. Yep. And then maybe there's only like less than 5%, 5 out of 100, 5% of the VC they can really make like money and profit for the LPs. Yep. And then it's taking the return cycle is pretty long. But maybe right now is a little bit different if you have a different strategy, because we see the like late stage company, their valuation just doubles, triples in months, not years. So right now I think maybe we're in a if you're betting on the right strategy, maybe you can have see the real money comes back quicker. But I think overall, if you're doing like very early stage, the cycle for you to wait for your return is pretty long. So overall, I don't think VC is a good business, but I do agree with you. I think VC is a very interesting job. Your every day is different. You're meeting different people. You're listening to different opinion. Looking at different technology every day. Talking to different interesting people. So what? And if you ask me whether I like how I see VC or as a career, I think it's a you can build a career around VC, but just don't think about making money from this. So what's your views?
Yeah,
What's your views?
I think they're I haven't been in VC for that long, right? Not even 4 years. But I like history. I like looking back at just what happened before. I think if you do that, VC has changed a lot, right? One is the valuations have shot up a lot, especially at the very early stage, right? I was actually just reading a book. The book talks about kind of the AI, what happened to AI, right? And it was talking about DeepMind. And I think the founders fund, if I recall correctly from the book, they put in $2 million for a 50% stake, right? Right? It's like, and then like, so that has like, that's like not possible today, even like close, right? I think I just saw an article where the average YC company valuation is now like over $40 million, right? For pre-seed, right? So first of all, the valuation has just gone up. There's just so much more capital, right? In this asset class. So that has inflated valuation, which makes it very tough. The second interesting stat I learned recently was I think it was I believe it was Thomas Lafont from Couture Management, but he was doing a presentation about how VC has changed. And one of those really interesting slides is it is now much easier to get a 10x return by investing in a $100 billion company to get to $1 trillion than to invest in a unicorn, get to a decacorn. It's actually 4 times. I think the stat was 31% from 100 billion to $1 trillion, and like 8% from unicorn to right. So then it's like, and you're not even seeing this. You see this in the public markets, right? With like Micron, Nvidia, like you can get a 10x and like blink and a buy. Why would you want to wait like 10 years for a chance to get maybe that return? So those are some interesting stats. Maybe it's a kind of supporting your thesis of like it's getting harder and harder to make money in venture. But who knows? I think venture is also going to be very different because of AI, because of the fact that you can create these products so easily, and these products can be so specific to your use case. I heard an argument that we're not going to get the next Google or the next $1 trillion company. We're just gonna have a bunch of these like maybe like 100, 200 million companies. All these companies are gonna be vibe coded, and they're gonna like cater to your specific need and industry. And so you won't get those like crazy returns. I don't know if that's true or not, but it is a hypothesis.
Or maybe there's like a giant comes in to acquire like 10, 20 of them and then make it as a $1 billion.
Right.
Or
I think it's a great opportunity for probably PE. Right.
The rollout strategy,
because you get efficiency, right? You can cut a lot of costs with AI. So I think it'll be a good next decade for PE. For VC, the power laws may change, which will make it harder.
I think this is a side topic. A lot of I heard a lot of people talking about power law. Can you maybe use plain language to explain
power law? What power law? Power law is like basically the 80-20 rule, if you know that, on steroids. So maybe it's like 99-1 rule. Like 1% of the companies will return 99% of your capital, right? So that's kind of the power law. Basically, a very, very, very fat tail, small fat tail, right? So that's how venture historically you need the power law, because more than half of your companies, especially your early stage, will go to zero, will fail, right? So you need those like 100x returners to make your fund.
So you think that may be changing?
Yeah, with AI, I don't know if it will change. I could see it changing, because again, it's so. The moats especially for software have dropped dramatically.
I recently it's a good friend of mine. So they're running their own VC. They've been doing extremely successful. So the reason is first of all they're very highly technical. They have a very strong industry network, expert network. And then on their investment strategy, they do something called barbell strategy. So they put a fair amount of their money capital into kind of a very late stage company about be IPO, IPO ready company,
right?
And then the rest goes to early. So I think the late stage they have some kind of a guarantee on the return. So that part, and then plus there will be upside as well. So that kind of protects the bottom line, the DPI for that fund.
I see.
And then they try to earn the larger upside from the early. So I think that's kind of I think you're right. AI makes the world different, and I do think if you're doing VC, you also need to adapt the change as well. Yeah. Okay, cool. So let's switch gear. Let's talk about your investment thesis or your fund's investment thesis, or how you guys. I believe you guys have kind of internal discussion on how to try to predict the world, what the world's gonna look like. So right now, any industry that you are paying more attention to, or you are more bullish about?
Yeah, I think so we have a few theses this year. One is this overarching theme of what we call shift from systems of record to systems of intelligence, which means in the past world, companies are very siloed, right? If you're sales, you use Salesforce. If you're in HR, you use Workday. But with agents, with AI, everything is collapsing, right? All the silos are being broken down, and we think there's an opportunity for someone to build this what we call like the ontology or semantic or memory layer of an organization, the brains of an organization. So that's one area where we're interested in trying to find startups that can plug into that layer. Maybe not be that layer because that's difficult to do, but have pieces of that layer, whether it's like security, whether it's like analytics. So that's one thesis. Another thesis is around bridging the digital physical world, bridging it together, right? So, for example, one of the companies we're investors in, they are creating agents on top of existing camera infrastructure, able to understand the real world, and you can create security agents or safety agents or whatever agents you want. So that's the second thesis. So think of this as like a physical AI thesis. And then the third one is the cost on the cost side. We think cost is going to become a major factor, major differentiator, and we think it's going to get more specialized. So we're taking a deep look at that side.
Yeah, well, I have a close friend recently just told me he wants to build like a cost optimization product.
Right.
Yeah,
Right.
that can be a very, very big market. It reminds me that I think Stripe acquired a company. I forgot how to pronounce that name, but it's a usage-based tracking system. They acquired for like I think more than $1 billion. Yeah.
And Nebius just acquired a company called Egan AI.
Yeah.
Right. Which is I think was founded not too long ago. It was a good exit, and a lot of the neo cloud guys, cloud hyperscalers, neo cloud, even application companies, they're going to need like experts in cost optimization because that's not what they're good at.
True. Okay, so maybe we'll talk a little bit about like deal sourcing.
Okay.
So what's your strategy in deal sourcing, like overall?
It's a combination of things. I think when I first started at TransLink, I was in VC, so I had to kind of start from scratch. So the route I took was to write content, as you know, and through that I got a lot of inbounds, particularly from investors that were interested in kind of exchanging ideas. So right now I have like, if you look at I keep a Excel spreadsheet of like all the contacts that I have, right? I think I'm probably like definitely over 100 investors. I don't talk to them all the time, but I would say like definitely like a dozen or two that I'm close with. So that has been that has been a really good start. I also get a lot of inbounds from my content writing. I would say the quality is very mixed. I probably like 1% of them are like actually good, but it helps, right? There's top of funnel, and then through that I've been just kind of leveraging that to like build up my network. And in terms of outbound, again, this year I'm trying to be a lot more thesis driven versus just opportunistic. And so I'm doing a lot of like direct outreaches to, hey, I've been exploring the topic of make it up cost for multimodal. Like you're building in this area, can we have a chat? So also leveraging my content sometimes to get conversations started.
Do you send your link of your content at the bottom of the email?
If it's a direct like if there's a direct connection, then I will. I'm like, look here, like I already thought about the space.
Yeah. I think that can be helpful.
Right.
Yeah.
And you can do it for the podcast too. Right?
Yeah, that's what I've been thinking. I mean, I'm not a research guy, but I think I'm pretty enjoying like making social content. Yeah. So this can be my I don't know how to say that in English. The 敲门砖.
Yeah.
What was that?
The
door opener.
Door opener. Yeah.
The wine opener.
Door opener.
Yeah. So I think it can be helpful. I do have some like inbound reach out recently from different kind of social media. Yeah. I just had a call with a very young guy this morning. He reached me out on Xiaohongshu, and I think he's building something interesting. Yeah.
Nice.
So I think it's the world is getting a lot more and more competitive.
Yeah.
I think for investor, we also need to, if we want to survive, we have to do something different.
Be creative.
Again. Yeah, I agree. I agree. So you say you're being more thesis driven. I think I still want to like ask you like on the kind of founder profile questions.
Sure.
Even though you're more thesis driven this year. So what kind of like a founder profile makes you like obsessed with, or you feel, or maybe do you think do you always invest in the founders you like, or no?
Yeah. So I think if there's anything I learned from my 3 to 4 years in VC, and I knew this going in, that like early stage founders are very important. But even then, I think I underestimated how important it is, right? So I think in early stage, it's like right now, I would say it's probably, apart from like market and what they're building, it's probably maybe even more like 50-50 in terms of weighting, probably even more now on the founder side. the qualities I look for are uh, it's hard to describe. I would say the ability to like be obsessed and move really really fast, and like the move is really really fast. I think that's probably my number one criteria. You think about it, a startup is like so disadvantaged, right? Like disadvantage from capital, disadvantage from distribution, disadvantage, like everything's disadvantage. The only advantage a startup really has is speed, and so like if you can't move fast, like you have no shot, right? And so that's the quality I look for, and the second quality I think is also something I underrated is the ability to tell a good story. Because if you don't tell a good story, and like as an investor, if I don't have, I'm like, then your employee or people that you try to hire are going to be like. So the ability to tell a story is not just from fundraising perspective. It's it's from recruiting perspective, which is so ability to build a good team and ability to move really fast. Those are like two really important qualities.
I think you brought a very good point. Is the skills of storytelling.
Yeah.
So I've been recently initiating a new thesis around the China origin founders.
Sure.
So, like from your experience, do you tend to see that the more they are Chinese origin, the less capability they're telling a good story? Do you see that? Or
I mean, I hate to say it, like I think, I by the way, I agree with that thesis. I think there's a good arbitrage opportunity on finding like very technical and skilled and experienced Chinese founders, and they may get overlooked by the tier ones. So I definitely agree with that strategy. I do agree, like like if you're not like first of all, like language does play an important role, right? If you're trying to sell to non-Chinese investors or trying to recruit non-Chinese employees, and you can't tell a convincing story, that's gonna be a hard sell, right? So I do think but what I try to push for is like if you're that, like if that is a big challenge, you need to have the ego to know, or not ego, you need to be humble and know that is a big gap, and you need to hire for that, right? So you need someone external facing, right, to manage all the external facing stuff. You can still be like the CEO and be the leader, but to have that humbleness and to know that is the gap, that I think that becomes the criteria.
The thesis I've been thinking or drafting is it's kind of like a value add to the founder by like coaching them a better way to tell
the story,
speaking in the English version, a better way, or maybe both languages. To tell a better story. It's tailored for the tier 1 VC.
I see.
Or like a Western VC, depends how I call it. I see there's like a lot of like a very talented, smart founders who just they didn't go to school in the US,
right.
Maybe not even master, but they've been building something very successful, in China, or had a very successful career in China, and they want to come to the US to build their own company here. But there's like a culture, like very 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 easy to tell culture gap between them and the Silicon Valley.
I mean, the other way to think about it is if you're like more of a product-led, bottoms-up product-led strategy, then it doesn't really matter. Like you build a good product, customers are going to show up. They're just going to buy the product. Your metrics are going to look good. Your revenue is going to look good, and then the good investors are going to bite, right? So that's also one way, right? If you're telling me this company's trying to do top-down like enterprise C-suite sales, then it's like a different story, right? So it's also mad like how do you pick your
makes sense. Yeah, makes sense. Okay, cool. So maybe the last bit. So maybe just talk about some advice from your perspective to founders. Some patterns they keep doing it in the wrong direction. Or I think
I think the biggest mistake I've seen in my limited time venture is knowing when to be knowing when to be aggressive and knowing when not to be aggressive. I think a lot of founders get that.
Can you elaborate?
Like for example, I've seen founders that, for example, hire too quickly, right? Spend too much on marketing. They haven't really found true product market fit. And then I've seen some founders that like there is product market fit here, but like you're still like doing founder-led sell. You're not hiring like a sales team. You're not going aggressive enough, right? So like the ability to know, it's very black and white, right? You have PMF, you have PMF, right? And if you have PMF, you should go all in, right? Because again, the speed matters, right? If you don't have PMF, then you gotta find that PMF before you burn all your money. So that ability to balance and know when to be aggressive or not is I think a skill set that some founders lack.
So when you're seeing someone or some founders, either you invested or not yet, but you're associate with the founder. When you see they're making that kind of mistakes, how do I address it?
I'm always of the opinion that don't know as much of the company as the founders do. Right, I'm not on the ground. I don't know the like day-to-day situation. So for the most part, I rely on their judgment and trust. But I would, you know, I don't want to go in and directly say, hey, you're not going aggressive enough, or hey, you're like you're too aggressive. But I would ask questions. It's like, oh, like you know, how was last quarter's sale? Oh, it increased by 200%. Oh, that's really good. Like who did the sale? Like, oh, it's just me. Oh, really? Like why don't you hire some more folks? Like just kind of like bombard them with questions that are like non-confrontational, and try to get them to like realize it by themselves versus me like having to directly say it.
Tell them what to do.
Right. And then that way they'd be like, oh, I came up with this idea. Right. Versus you know,
So you have been sitting on at least one board of your portfolio company?
Yeah, actually a couple. But one that I sourced in, a couple from prior.
Got it. So speaking of the one you sourced and you're sitting on the board, how's that? Like, tell us more about what's the experience of sitting on the board seat? How's the dynamic look like?
It's good. I mean, I don't. Again, my assumption all the time is like founders know more than I do about the business, about the market. It's kind of sort of like I'll give the analogy. It's like Titanic. Like I am the person that's on the bird nest when like looking out for icebergs, and they're like the captain and the crew, right? Like managing the direction of the boat. I can only see so much from up there, but I can see some stuff that the crew cannot see, which is the icebergs. Right. So I like to try to play that role versus trying to be like the person in the engine room putting coal in the in the thing.
One analogy I forgot where I heard is I think it's Jeff Jordan from a retired GP from A16Z in the consumer group. I remember he was saying his philosophy is never taking over the steering wheel from the founder. Right. Yeah, I think that I just remember that analogy.
But I mean, sometimes luckily this hasn't happened yet. But sometimes if you're in the bird nest and you're looking down and you're like, hey, why is this captain staring directly into the iceberg when I'm telling him not to? Maybe we need to replace the captain.
I mean, that happens a lot.
Sure.
Yeah, that happens a lot.
But that's part of the job as well.
How can people reach out to you? Or what's the best way to reach out to you?
Email kmu@translinkcapital.com, or just ping me on LinkedIn. I'm usually pretty active there.
How so for people like human people want to reach out to you?
Sure.
How to make them not look too much like AI so that you will throw the email into your junk box?
I read each email. Even if it's AI, I don't care. As long as like a good company, good founder profile, you can automate the entire message, and I'll still take a meeting.
so let's say, do you suggest them to write some of or include some of their traction or like any kind of content you think is eye-catching for you? If you were talking about email or maybe a LinkedIn message, maybe send a quote of your article or
no, I think that's I think being yourself. I don't know how to say it, but like being, I get a lot of like salesy. You can tell it's like a sales. They've like sent it to like 1,000 people. But just being said, like, hey, this is who I am. I'm building, like just be yourself. Be genuine. And if it's a good company, like it looks good and your profile looks good, then I'll take a meeting.